This is Matthew Cratter from Bitcoin University. Today I want to answer the question, is Layer 2 Bitcoin a shitcoin? I made this video about Bitcoin and the Liquid network, and I was actually surprised by some of the comments I got. This first one sounds like a shitcoin. The second one was, hey man, Liquid BTC and wBTC are shitcoins. I don't see what the difference between the two is, except one is on ETH. The other is managed by Adam's company, referring to Blockstream. Now, the Liquid network, as we talked about in that video, it's a pegged sidechain to Bitcoin. You basically lock up some BTC on the base layer of the Bitcoin network on the blockchain and get an equal amount of wBTC on the Liquid network. So no additional BTC is ever created anywhere, and the BTC that's held on the Liquid network is secured by an 11 of 15 multi-sig, whose members also sign blocks. So you would need at least 11 of the members to collude in order to rug you. Once you have wBTC, which is BTC on the Liquid network, you can send it around using the Liquid network, which has many advantages. It has low transaction fees. It has confidential transactions. So that leads us to this question, is wBTC, which circulates on the Liquid network, is it a shitcoin or is it Bitcoin? Let's start with a really obvious example, or maybe not so obvious example. We have Coinbase. When you buy some Bitcoin and leave it on Coinbase, is that Bitcoin that belongs to you that's sitting in your account at Coinbase, is it a shitcoin? Now, I think these things are all true, not your keys, not your coins. Coinbase might take weeks, months, or years to send you your Bitcoin out of your account once you request a withdrawal. Coinbase might freeze your BTC if the US government tells them to. Coinbase itself might get hacked, and their insurance coverage is not enough to make all customers whole. But the question, is your BTC held on Coinbase a shitcoin? It's certainly a Bitcoin IOU, or possibly even paper Bitcoin if there is not enough real Bitcoin at Coinbase custody to pay you out. So there are lots of bad things here, but I still wouldn't call BTC held by Coinbase a shitcoin or altcoin. Rather, it's a form of custodial Bitcoin. Coinbase holds the private keys, and this form of custodial Bitcoin is obviously at the whim of governments, regulators, courts, etc. So it's a very subpar way of holding Bitcoin. If you're enjoying this video so far, please help to support the channel by clicking the subscribe button, become a subscriber, click the like button, leave a comment, question, suggestion for a future video. Also share this video with a friend or family member. Now that we've discussed Coinbase, let's compare it to the Liquid network. So Coinbase, you have a single custodian that holds your Bitcoin for you. Liquid network, by contrast, you have 15 companies. They get together, they've created this multi-sig wallet where they hold the BTC, as we said, that backs all the wBTC that exists on the Liquid network. Unlike Coinbase, with Liquid, you can cryptographically demonstrate that the wBTC is fully backed by BTC at all times. With Coinbase, you just need to trust them. To steal this BTC held in the Liquid Federation's multisig, as we said, 11 out of the 15 companies would need to collude and sign a transaction that steals the BTC. By contrast with Coinbase, only one company needs to collude, basically collude with itself, or a number of executives need to collude in order to steal your Bitcoin. So if the BTC held on Coinbase is not a shitcoin, then the BTC held by the Liquid Federation is also not a shitcoin. Now, wBTC definitely offers weaker ownership guarantees than BTC on-chain, but it also gives you lower transaction fees and confidential transactions, as we said. Now, you may personally not like those security cost privacy trade-offs, but I still don't think that makes wBTC a shitcoin. And remember that wBTC is 100% backed by on-chain BTC. If I'm too poor to afford on-chain transaction fees to move BTC on-chain, and I choose to use wBTC instead, either to store the Bitcoin or to move it around, does that make me a shitcoiner, a scammer, an idiot? I don't think so. Now let's turn from Coinbase and the Liquid network to the Lightning network. Lightning network, BTC gets locked up on-chain on the base layer in a 2 of 2 multisig. You can compare this to Liquid's 11 out of 15 multisig. And then that BTC can be sent around the Lightning network using interconnected payment channels. Does this make BTC on the Lightning network a shitcoin? I don't think it does. It's basically the same asset using different payment rails and different trade-offs. I don't think it's an accurate use of the term to call people shitcoiners who use the Lightning network to send sats. Then we come to wBTC, wrap Bitcoin, which one of the questioners, one of the commenters, asked about. This is, of course, an ERC20 token that's built on an Ethereum standard that rides on Ethereum rails. The BTC that backs it, if it in fact backs it, is held mostly by a single custodian, which is BitGo. They're the primary custodian. They are also the company that's in charge of the minting process, minting new wBTC. Is wBTC a shitcoin? I would say in this case, I think so, but it doesn't really matter since I would never use it anyway. wBTC rides on the payment rails of Ethereum, and this is a really big difference. Ethereum is a scammy crypto that had a large pre-mine, unethical hard fork after the DAO hack, and that moved to proof of stake, which gives these pre-mine beneficiaries lots of control over block production. This is a problem under proof of stake. It's not a problem under Bitcoin's proof of work. Now, getting back to wBTC, can I easily convert my wBTC back to BTC? I think it's unclear. You need, as far as I can tell, you need BitGo's permission to do this. Is this better or worse than needing Coinbase's permission to withdraw your BTC or the Liquid Federation's permission to peg out and exchange your LBTC for on-chain BTC? I think you're much more likely to have trouble with BitGo or Coinbase than with the Liquid Federation, which also has the advantage of being an international group of companies. So we've discussed the Liquid Network, Coinbase, the Lightning Network. Let's discuss briefly fedimints, which we've talked about a little bit on this channel. These also have the Federation trust model, just like the Liquid Federation. But in this case, the guardians of the multisig can be whomever you want. They can be friends and family members, people from your community or village that you know in real life and trust. So imagine a world of thousands of different fedimints that compete globally to offer the lowest fees, the best service, the best security, and all these different fedimints are linked to each other over the Lightning Network. So what's the comparison here? We have Coinbase, single custodian. We have wrapped Bitcoin, wBTC, basically a single custodian, which is BitGo. We have Liquid, which is a custodian with 15 corporations working together to process transactions, to make blocks, and to secure the underlying BTC in a multi-sig vault. And then we have fedimints. Custodian is multiple people or corporations working together to process transactions and secure the BTC, also using a multi-sig. And then we may have other custodian solutions. For example, for various people in my family who are either too old or too young, I manage the Bitcoin and I'm basically their custodian. I'm a trusted solution. I'm probably not going to rug my own family. So it's important to think about the whole spectrum of custodial solutions. Kids who are under the age of 5, adults who are over the age of, let's say, 85 or so, probably shouldn't be managing their own Bitcoin. They're going to have to rely on trust, which we often vilify in the Bitcoin ecosystem, but which we still need to use in order to interact with people in everyday life. Families wouldn't be possible, marriages wouldn't be possible if we didn't have trust. So if we look at it this way, Coinbase, wrapped Bitcoin, Liquid, and fedimints are all various variations on the custodian model. Lightning Network, 2 parties in the payment channel. It's a little bit different. I think you can leave at any time if the other party tries to cheat you. So you do have the option of unilateral withdrawal, but to get out you need to pay an on-chain fee, which could be quite painful if on-chain fees are really high at the time. If your channel partner in the Lightning channel cheats you, though, the protocol will let you confiscate some of their funds, which could help to pay for those extra high on-chain transaction fees. Here's the overview. Lightning users can use a penalty transaction to claim funds from a channel partner who is cheated by publishing an old commitment transaction. So the Lightning Network, as we said, allows unilateral withdrawals. Unlike Coinbase, wBTC, Liquid, or fedimints, which are more custodial solutions where you are trusting the custodian to various degrees. I think it's more helpful to speak in terms of trade-offs rather than labeling everything a shitcoin that's not on the base layer. In the future, transaction fees will be much, much higher on chain because there really is limited block space, and forcing almost everyone to use higher layers much or all of the time because of these high transaction fees. These people, you and me, will still be Bitcoiners, not shitcoiners. So I don't think we should be too fast to call Bitcoin on different layer 2s a shipcoin. Everyone should still strive to own as much on-chain BTC as they can. This is the quote-unquote gold standard or the Bitcoin standard, but we should still expect some form of BTC to end up in every nook and cranny of the global financial system, whether it's in an Apple wallet, whether it's on Cash App, whether it's other places, as well as on different Bitcoin layer 2s, because this is what hyperbitcoinization looks like, Bitcoin basically going everywhere in the financial system. Also wanted to wish you happy Bitcoin Pizza Day. May 22nd, 2010 was when Laszlo bought 2 Papa John pizzas for 10,000 Bitcoin. And I like Bitstein's take on this. On this blessed Bitcoin Pizza Day, let us remember the real hero of the story, Jerkos, who boldly demanded Bitcoins in exchange for pizzas. He's a major source of inspiration for Bitcoin carnivore hodlers everywhere. Get rid of bread, acquire Bitcoins. Thanks, Jerkos. And happy Pizza Day, Bitcoin Pizza Day to all of you. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.